This strategy changed my life and helped me make millions of dollars from the markets. Helps me stay consistent and really provides me the lifestyle that I've always dreamed of. And I'm going to show you exactly how you can implement this from a top-down perspective all the way down to actually finding an entry. I'm going to show you this in real time with a live trade that I took in front of my community in our live trading session today. So first thing is, of course, market preparation. What we need to do, which is step one, is check our higher timeframes. The higher timeframes being the weekly and the daily timeframes. You want to identify your big resistance zones, your consolidation, your overall direction, whether that's bullish or bearish. Look for major supply and demand levels and key trend lines. So let's see what that looks like on the actual charts. So this is gold on the weekly. Now, weekly is not telling us much, is it? It's just extremely bullish. So what we can kind of pick from this is that majority of traders will be looking at some point a retracement bearish. So any sort of bearish price action that we're seeing on lower time frames could be a confluence for a buy for us. Let's step it down to the daily and have a look. So on the daily, we actually see a big push up. This was today's price action. I will explain why this happened. And this is something that I actually explained on my live call with my community. I actually spoke about this, that when price comes in and starts consolidating, we are expecting at some point a big explosion. It's the same thing that happens over here. Look, consolidation, explosion. There's no accident to that sort of price action. Same thing here, except on a smaller scale, 5 days. Wick up, wick up, wick up, wick up, wick up. Everyone is expecting a big retracement, but not us. I spoke about it and I said that this is where the liquidity lies. And I said actually today, it's going to take $300 billion to move price from where price was when we were looking for a buy into this high. And price did that, meaning that it actually moved about $500 billion to actually go and take that liquidity and make this new all-time high of $3,685 per ounce. This is crazy. This is insane. It's amazing. But it's like when we leave liquidity on the charts, and again, by identifying a big resistance zone, which was here, it made sense that price would pop like this. It's exactly what we speak about inside our community every single day. Price will do that big pop, take all that liquidity out, and it's game over. But we understand that, so that's why we look for buys, even if we see bearish structure. So, step two, we're going to spot the liquidity areas. Look for trendline liquidity, which we didn't see anything. Support resistance zone, we just showed you the big resistance above price. That is where traders will be looking to go short in that zone completely. And of course, setting a realistic target. The first target was to take out the all-time high. Price has done that within the same day. Extended targets, look, we don't really have one for gold. It's just made a new all-time high. So what we do now is we're actually going to go onto phase two, which is the market confirmation phase. So step one is go down the time frames, 4 hour, 1 hour, 15 minute. We're going to look for retracements into supply and demand. We're going to see what market structure doing, checking where the fib traders are getting in, checking every other aspect that we can on the charts. And then after that, we want to see if we can identify any false moves, any traps that are really trapping traders in. We confirm them with wicks, bearish, bullish, bearish engulfing candles, breaks of structure, which you're about to see. After this, we look for multi-time frame alignment. Again, manipulation on the 15 minute, the 5 minute rejection, the 1 minute confirmation entry. Let me break this down step by step so you can actually see exactly what I'm talking about. And we'll start on the 4 hour time frame here. So when we go down to the 4 hour, we can see we had a bearish break of structure here after price made this high. I pushed down, I retraced into a supply zone, which also retraced into your 61.8 Fibonacci area. And then what? We had another retracement. Price then did a deep retracement into a supply and then started to move its way down. Again, a lot of traders would expect that price was going to go make this low, but not us. We understood big resistance above, big resistance above. Not only that, but you're going to see some internal structure which aligns with that. Again, remember, coming back to my point, align your time frames together and find reasons why price will do what it's going to do, which in this point was just go and take out all this liquidity to the upside. Now, if we look at price action now, here's your big push to the downside and retracement. And here we go, low, lower high, lower low. So external structure being this high to this low lines up with internal structure, which is from this high to this low on the 1 hour time frame, sorry. We can also identify, which again, we're going to go down to the 15-minute to do this, but we can see that we have a supply zone right here. You can see big supply area, again, major short zone for a lot of traders. Now, consider this, that we have multiple time frames stepping down bearish, and now we actually have a new range from this high to this low. We also have price returning to our 61.8 Fibonacci zone. So we have a lot of traders shorting here. Now this is when we're going to go down to the 15-minute. We're going to pair all these time frames together. Now, when we look at the 15-minute, what do we see? Well, we come up into that 61.8, do a big push down, and then start to come back, push up, push up, push up. Here we have a small break to the downside. Now I'll explain this in a second, but first I want to draw your eyes to the fact that we're at this big supply and we're at this big resistance zone here. Now let's focus on the 61.8. So 61.8 or Fibonacci zone, traders are looking for a bearish push to confirm the move. The bearish breaker structure is trapping in smart money traders in this area, trapping in market structure traders. And if I remove this fib, we already know we're at the 61.8 in this bigger range. But if I pull a fib from this high to low, you can see that we have another 61.8 retracement, which is right here. So we know that this area right there has your market structure traders, your ICT traders, your resistance level traders. Remember, we have that minor resistance across here. Price returns there. Everyone's looking to sell. You've got your structure traders. You've got your fib traders. Everyone is going short right now. This is why we need to look for a buy. This is why we expect big pushes like this, which takes out all the liquidity, and then this to actually go continue higher and actually take out the high of the range. Price ended up making an old new all-time high on gold, but let's talk about this entry model and how we were able to get into this trade. This is again how we're pairing those time frames together, which is exactly what I just spoke to you about. And when you can actually identify this, you're going to make so much money in the markets. It's going to be you're not going to be able to unsee this. It's going to be so easy for you. So here, big push down. Price then takes out a small support level right here and then does a fake push, comes back one more time to take this low, which is something I speak about to my community all the time. Price will do this push and everyone will jump in long expecting a retracement. Price comes down, takes that low once more, and then off it goes. And it did that, aggressively pushing up into this area. Now, because price was aggressive, I knew the entry had to be aggressive. So all I waited for here was a 1 minute bearish engulfing candle, which was there, trapping traders into a short, trapping your fib traders, trapping your SMC traders, trapping your market structure traders. Where are their stop losses going to sit? It's either going to be sitting here above this high or here above this high. So what does price do? And again, we covered the stop loss, just covering any sort of liquidity where price could come down first, because price often can do something like this, bearish engulfing, tap in one more time, and then go, right? Creating two bearish pushes and then rocketing up to the upside to take all that liquidity. But in this case, we would simply enter and price pretty much just went in our direction. Now, I said I was very excited about this move. It took about 10 minutes to actually have a 1 to 2 risk to reward, which is all I go for. Price did reach a 1 to 10, where it is currently now. But of course, that's not my strategy. We have students that do take partials at 1 to 2, but the way I like to do it is obviously just 1 to 2, close out. I know my win rate, I know my risk to reward, I know what I'm going to expect from the markets every time, and I take my trades based on that. And price ended up going and just clearing that liquidity. It was just amazing to watch. Bring it back to phase 3, which is the market confirmation. We only want to enter if the manipulation is clear. So we need a liquidity grab and we need stop hunts taken. So first, find if there's a supply and demand or imbalance respected, which again, we had price tap into that demand zone, we had price manipulate, bearish engulfing on the 1 minute, and that is where we went in. Price rocketed up, took out everyone at the same time, except for us, who were able to take all that money in for ourselves. Now we need strict risk management. You saw I gave my stop loss room to breathe. 40 pips on gold. I could have done a 10 pips, 20 pips, gone for a 1 to 6, gone for a 1 to 10 even, gone for a 1 to 20 even, 30. But that's not my strategy. I want to give price room to breathe because again, I don't want to have to take a second trade. I don't want to have to, just get wicked out and see price go in my direction. Will that still happen? It can, but by giving it room to breathe, you're really just going to let price do its thing. I mean, 10 minutes to hit a 1 to 2, even with a 40 pip stop loss, is very, very good. So gold really does move quick. So if we're on the right side, like we were, spotting all the liquidity and going the other direction, that's when we're going to make a lot of money. And of course, the one thing we need to understand, we need to stick to discipline. If the setup is not confirmed, we should never take that trade. We should have our take profits at pre-marked liquidity levels, things like trendline sweeps and support and resistance. But by trading like this, you're going to have strict confirmations to get in and out of the trade, and you're going to be putting yourself in an amazing position to make some consistent profits from the market in a very short period of time. But guys, thank you so much for watching this video. I hope you enjoyed it. Make sure you like, comment, and subscribe. I've got much more coming for you. Ton of value, free value. I just want to keep pumping you guys and really show you that, I'm the real deal, and I really care about all of you as well. So yeah, look, let's keep it coming. Hope you guys are learning a lot. Thanks so much. I'll see you on the next one.